So the first trade we're looking at is on NDX. This PowerPoint is where I do my trade review, but we'll take a look at the charts and what I was seeing. If we do a 1 hour chart, the blue arrows is where I entered these credit spreads. And essentially, if you take a look at the price action, we just made a new leg down and this double bottom here. So this double bottom on Wednesday and Monday, I'll indicate it by these. This double bottom acted as support, and we knew that there was a new trend in place. So essentially, you one had a trend line break, and then two, you had a double bottom. So my bias is already thinking reversal. My bias is already thinking, let me go long with credit spreads. Right. So if we take a look at the 5 minute chart where I actually entered the trades, I entered the first trade at around 10 o'clock with a break even of 20,146. We can indicate that like here. So essentially with a credit spread, I will end up collecting the full credit if price is above this level, right? So if I entered right here, I put my break even to right below the low of the day. So essentially, all I need to do is have price stay above the break even. So I entered the first trade here at around 20,200, and you could see price is already going higher, so I'm able to collect the full credit. And then lastly, I call this the double dipper because you first get that uptrend higher, and then we know that the market will eventually pull back. However, the overall trend for the day is still long, right? Low of the day, high of the day, right? Price is still going higher, but price never goes in a straight line. We know that there was going to be a retracement. So I knew that I can probably come back in this trade later on in the day, which is what I did later on in the day at around 1:40 p.m. I took my next trade entering at around 2,220. However, my break even was below this low, 2,190. So all I needed was price to stay above that break even, and I'll collect the full premium. And for this trade, for NDX on this day, it was a 0 day to expiration option, so I was able to collect the full premium. This is sort of the beauty of credit spreads because, one, if you're trading it on a trending day, price never really comes back to your break even. And I could have maxed out, bought a lot of contracts on this first entry, and then been safe for the whole day. However, I wanted to come back in the day and sort of continue to ride that uptrend as I knew that we had reversed on the longer term trend. So the two charts that I'm looking at here is the chart on the left is a hourly chart, and then the chart on the right is a 5 minute chart. I'll use the hourly chart to sort of get the trend, assess what the market is doing, and then lastly, to enter my 0 days to expiration trades, I'll enter on the 5 minute chart. So that was the trade on NDX, where one of the best trades of the week, where I collected around $700, $750 on the day.